Great news! HSBC Hong Kong allows for buying Bitcoin ETFs, Bitcoin and Ethereum. Look at these news. But there is a catch. Those are future ETFs. Now there's a difference between future ETFs and spot ETFs. With future ETFs, you're just betting with a counterparty on the price development of Bitcoin. You're not really owning the Bitcoin. Neither is the counterparty. They're simply just a cash settlement at the end of the future's expiry, which then in the end determines if you make money or if you lose money. Now, why is that a problem? There's two problems here. The first problem for the general market is that these kinds of bets do not have any impact on the Bitcoin price. In other words, if you're currently based in Hong Kong and you want to invest in Bitcoin, this is not money that's helping the overall market appreciate the price. The price stays stable. There are two people completely off the book that are making random bets on how the price will develop. There's not really Asian money coming into Bitcoin. Now you might say, what's the problem? I simply just want to get Bitcoin price exposure. Who cares how this price exposure is generated? Might be directly Bitcoin, might be a derivative instrument, a future. Where's the problem? The problem is you don't own the Bitcoin like on a hardware wallet. And that means that when Bitcoin tends to appreciate most, you have the highest risk of actually losing all your money. Bitcoin is a hedge against the traditional financial system. If now the banks get bailed out left and right, and if some of them collapse, then in the event of a collapse, you will lose that money. It looks like people have completely forgotten what happened during the global financial crisis, when many retail investors had their money parked in Lehman Brothers certificates. So a lot of those certificates simply just got exposure to an underlying. If you had paper gold from Lehman Brothers, that's all gone. If you had physical gold, you still had the money and you even got price appreciation. And it's the same with Bitcoin. When there is a complete implosion of everything, then the Bitcoin price goes up, your Bitcoin on the hardware wallet goes up, your Bitcoin ETF might not be worth anything anymore. And that's especially risky for futures ETFs, for ETFs that are not physically backed. And so that's why those kind of news aren't that great even. The people that are interested in Bitcoin, they might have gone through the hassle of actually learning how to buy and custody it. But now that there's an easier on-ramp, that money doesn't hit the market, the price doesn't appreciate, it even takes away money from the people that would have bought. But it also might give Bitcoin a bad reputation when those ETFs potentially blow up. The whole idea of Bitcoin is to have value that is independent of third parties. You don't want to have your Bitcoin on FTX. You don't want to have your crypto on Binance. You want to have it all in your own wallet. It is painful, it is hassle-some, it does take a learning curve, but it is worth it. You might not feel the pain of that mistake instantly, but there is a real chance that it will hit you. If the issuer goes kaput, so goes your ETF. So yes, it looks like regulation in Hong Kong around Bitcoin is loosening up. In the past, HSBC was even blocking accounts for dealing with crypto. I'm not sure how they are dealing with this right now. The current news might indicate a trend in the right direction, but so far, futures ETF trading is definitely not enough of a step. If you've got Telegram, feel free to join us. I hang around the Bitcoin strategy channel regularly. Simply search for this within the Telegram app. There's also a link down below. Looking forward to chat with you. Bye bye.